Okay. So we discussed some elements of bank in the previous discussion. Now we need to look at the main part of a bank. What does a bank do? As far as you look at the bank's balance sheet is concerned, if you look at it, I'm writing this horizontal easy to understand. What are the liabilities? What are the assets? We need to understand this. Banking itself, there is a big story where how it came and all that. I'm not getting into that because it's very interesting. Yet, primarily, they get money in the form of deposits from customers. That money may be given at, say, 6% is the rate at which they are giving interest. They are paying interest. On the other side, there are a lot of people who want money for various reasons. So bank lends those monies as loans, and they charge not 6%, they may be charging 10%, 9%, and so on. So the difference between the interest of what they have charged and what they pay is called the spread. The higher the spread, the better. The higher the spread, the better. Now, in a bank's balance sheet, the most important asset is not fixed assets. It is this loans is a major factor. Now, the difference. So, what is the income for the? If you look at the P and L of the P and L of the bank, it is the interest mainly what they are earning, and they have to pay interest also. Now, to earn this interest and that too the spread, right? That is what is the benefit for them. But by giving the loan, sometimes what happens, the loan itself may not be recoverable. Some problem because loan, it is not the interest only they are interested. They are also interested in recovering the principal also, especially in terms of term loans. They have to recover the principal also. Because if principal itself vanishes, you can imagine that the huge impact on the profits because that becomes a loss. So therefore, the bank is very, very risky type of business because if there is an issue as far as loan is concerned, if the loan payments are defaulted or if the person who has taken the loan is not able to repay the loan, then it becomes a problem. For example, people, especially in certain banks in India itself or especially in Kerala, they give a lot of money to NREs, right? Especially when they are having large income when they are abroad. Now, a situation like COVID or some issues is coming and they are not able to, they lose their jobs there. And when they come back, they may not be able to repay the loans at all. That becomes a big problem for the bank. They are actually interested in the interest, right? But that is okay. Not only they lose the interest, they lose the principal itself. Therefore, there is a huge risk as far as the bank is concerned because at the end of the period, they have to give the interest to the depositors, plus they may have to repay the deposits also. So, if there is information that the bank there is a problem, what will happen? All the depositors will come and try to take their money, and the bank may not have enough money to pay. That gets into liquidity crisis. Similar problems we have seen in Global Trust Bank, recently in Yes Bank. So many problems have happened because the liquidity problem becomes a big issue. Because if certain all the depositors see, the assumption of giving loan is that all the depositors will not come in one day, but because if there is some issue and there is a bad name or something like that happens, all the depositors will start marching in, they will want the money, and that happens, banks become a sure shot for failure. So, keeping this in mind, what is done is the loans are monitored in a very, very strict manner and they are classified based on certain categories. Why? Because depending on the category of loan, they are termed as standard, substandard. The moment they don't perform properly, they are termed as substandard. Then they go into doubtful, Under doubtful, you got one, two, three categories. Sir, what is the need for all this? Basically, because they have to be provised, provision has to be created. So once it goes there, there is a higher provision. Once it goes down, even more higher provision. Therefore, as and when the quality of the loans are decreasing or becoming bad, you know, bad means the moment it goes into substandard, it's called bad, mind you. Then it is only going down. The provisioning will increase. Provisioning mean increase means the P&L debit will come to that extent, and as a result profit will be shown less. Once it jumps back, then obviously this whatever the provision will come down and it will be beneficial to the bank. But this is very strictly maintained by the bank, and it is monitored very well by RBI. Therefore, when we go for statutory audit of banks, one of the important thing is for us to identify whether these accounts are categorized correctly under different rules of classification. These are the rules of classification based on which is taken a standard, substandard, doubtful, under doubtful 1, 2, 3. So we will look at what are these categorizations, how it is defined as substandard and how it goes to doubtful. But you need to just overview is what is the reason for this classification, because provisioning rates are different. And the how it has to be classified under different categories. These are what we will just look at it. Okay. Now, this is what we have to do. The banks have to classify their advances based on four broad groups, taking into account the degree of well-defined credit weakness and extent of dependence. All from a material, you can again read it from the material or my notes. Dependence on collateral security for realization of those. Banks should therefore keep the following definition in mind. What are those? Standard asset. Standard is asset is one which does not disclose any problems, which does not carry more than normal risk attached to the business. Such asset is not an NPA. NPA means non-performing asset. Substandard asset. Substandard asset is the one which has been classified as non-performing for a period not exceeding 12 months. That means it cannot stay more than 12 months in a substandard category, maximum 12 months. It becomes NPA on a particular date. What is the classification, how to do that, we'll look at it later. But once it becomes an NPA, it can stay in substandard for only 12 months. In such cases, the current net worth of the borrower guarantor or the current market value of the security charged is not enough to recover the dues to the bank in full. What is doubtful assets? A doubtful assets is one which has remained NPA for a period exceeding 18 months. This make it 12, I think. 12. This should be 12, I think. Just correct it. In the case of term loans, those whose term principal remained overdue for 12 months. Venus, what is the note saying? 12, right? Venus, you have the notes?
No, sir.
You don't have. Okay. 12 months shall be treated as doubtful. Here, as in the, because here it's 12 months, no? It cannot be exceeding for 12 months. Now, here too, as in the case of substandard assets, rescheduling does not entail the bank to upgrade the quality. So, within that, there are certain categorization doubtful, as I told you. Now, loss asset one which where the loss has been identified by the bank as a bank or internal or external auditors or RBI inspection, but the amount has not been written off wholly or partly. In other words, such asset is considered uncollectible and of such little value that its continuance as a bank asset is not warranted. That's called loss asset. Now, taking into account the time lag between an account becoming doubtful of recovery is recognition as such, the realization of security and erosion over time in the value, it has been decided the bank should make provision against substandard asset, doubtful asset, loss asset as follows. Loss asset, full provision. Doubtful asset, full provision to the extent of unsecured portion. In doing so, realizable value of security available to the bank should be determined on a realistic basis. We'll do problem, then you'll understand. DICGC, ECGC cover is also taken into account. In case of advance covered by CGT, SME, SMI, SI guarantee becomes non-performing, no provision needs to be made towards the guaranteed portion. The amount outstanding in excess of the guaranteed portion should be provided for as per extant guidelines. Additionally, 20 to 100% of the secured portion should be provided for depending on the period for which advance has been considered doubtful. What is the thing that is given? See, up to 1 year, 20%. This only we are talking about doubtful. Huh? We are talking about doubtful, 20%. More than 1 year to 3 years, 30%. And this is 45%. Substandard asset, what is done is a general provision of 10% of the outstanding amount shall be made without making any allowance for DICGC cover. DICGC covers only when it comes to doubtful. An additional provision of 10%, total 20% of the outstanding. So here, this is, I think, make 15. Huh? So total 10 plus 5, 15, 25%. This will be 25. Of the total outstanding is required to be made on the unsecured portion ab initio of the loan. Generally, such a situation may arise in the case of personal loans, education loan, etc. Unsecured exposure is defined as an exposure where realizable value of security is not more than 10% of the outstanding exposure. Security should not include guarantees, comfort letters, etc. Now comes standard asset. Standard asset, there is a general provision of 0.4% of the total standard asset should be made. It has been clarified that provision should be made for global portfolio and not domestic advance alone. Total advance, not individually. That's what they're saying. Okay. Now we will do the problem and correct the rates. I will give you the correct rates, but let us do the problems. Okay. We'll get disconnected in a minute or two, and then we will reconnect and then continue doing the problem.